Good morning, everyone, and welcome to the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. On our agenda for today, our consumer goods analyst, Chima Ukadike, will be taking us through the recently released Nestle financial report for the third quarter. Following that, we'll get the usual rundown of the equities and fixed income market from our traders. We also have joining us today our partners from CGF Boss, and they'll be giving us updates on the BRVM. We'll then conclude with headlines from across Africa brought to us by our media partners at Frontier Africa Reports. As usual, we'd like to remind everyone that the meeting is being recorded and the audio file may be shared with third parties. It's also being streamed live on our Vetiva online Facebook page if you'd prefer to view or join from that platform. The session is set to last for 30 minutes inclusive of Q&A, and if along the course of the meeting you have any questions, you can send them in using the chat function available on Zoom. And if you're joining us from Facebook, you can make use of the comment section. However, I'll be having a Q&A segment, and if you'd prefer to speak, you can make use of the raise hand function and you'll be given an opportunity to speak. We'll now be starting off with Chima, and she'll be reviewing Nestle's third quarter report. Good morning, Chima.
Good morning, Victoria. Good morning, everyone. So Nestle released their 9-month-21 earnings results, where they reported a 23% year-on-year growth in top line to 262 billion naira. This was we believe that it was very significant and impressive because we compared it to their 3-year average growth rates for 9 months 20, which has averaged about 12%, in that period. But less impressive to us is the bottom line performance, which improved 5% year-on-year to 34 billion naira. So our reason for thinking is less impressive is same as for top line. We compared it to the 3-year average growth rate, and came to 12%. So comparing 12% to 5% seems, although it's still positive, it's less impressive for us. Going into the Q3 performance, one key trend that we've noticed, at least in the past 2 quarters, that's Q2 and Q3, we have seen a turnaround in food segments. So we had noted that over the past 2 years, although the food segment has been is the heavier weighted segment, at least in terms of actual revenue, the beverage segment has been the growth defining segment. So we have seen over the past years, we've seen the beverage segment return or grow by 8%, and compared to the food segment that has basically stayed flat, it has grown at only about 1% in the same period. So we find it interesting that for the Q3 period this year, the food segment has driven a significant portion of the growth we've seen in the 9-month period. The food segment grew about 42% year-on-year, whereas the beverage segment only grew about 8% year-on-year. Drilling down to the driver of the growth in revenues, we attribute it to the price increase that we saw in Q2. So we reported that in Q2, Nestle increased prices across its food and beverage segment, and we are seeing the year-on-year impact as well in Q3 period. But apart from that, we also believe that volumes have improved significantly, because if we compare the Q3 performance to the Q2 performance, which are normally equal in strength, we saw that there was a 7% quarter-on-quarter growth between Q2 and Q3. So we believe that is basically accounted for by increased volumes. However, despite the positive revenue growth story, we saw that gross margin declined by 200 basis points to 39%. We believe that this was due to pressures from FX liquidity challenges, although Nestle imports just 15% of its raw materials. We also know that on the local scene, there has been a lot of inflation to deal with. So we believe that inflation on raw materials has also squeezed margins for the company. However, due to cost optimization on the OPEX line, we saw that EBIT for the company remained flat. EBIT margin remained flat at 22%. Looking down further in terms of finance, Nestle's cash balance has improved significantly. It grew by about 32% to about 116 billion naira. And that has positively influenced its finance income. So we saw that finance income grew about 71% year on year to 1.2 billion. Although we also note that the rising yields in the fixed income space has also contributed to this as well. But on the other hand, we can see that year to date, so far this year, Nestle has increased its loans and borrowings from intercompany loans by about 28 billion. And that amount is mostly or really foreign currency denominated. So the increase in its loans and borrowings have really affected its finance costs in terms of interest payments and foreign exchange losses. So we saw that finance costs for the year grew by over 2 times to about 4.7 billion. With that, Nestle's net finance cost printed at 4.5 billion naira and brought PBT to about 30 and brought PBT to about 51.6 billion naira, which is a 5% year-on-year increase. Overall, Nestle's PAT has grown to 33.6 billion naira, which is a 5% year-on-year growth as well. In terms of our outlook for Nestle, we believe that revenue will continue to be supported in the next quarter by increased consumer spending. So we know that the Q4 period is a very strong period in terms of festivities, and we tend to see a lot of spending, especially get towards FMCG products. So we expect that, as well as the price increases we've seen so far this year, to sustain a very strong growth rate for its Q4 period. In terms of the remaining line items, we believe that they'll stay in line with the current trend we've seen so far this year. That's in terms of OPEX and net finance costs. We expect net finance costs to come in significantly higher at the end of the year. We will be updating our forecasts for Nestle, and we'll be sending our reports by the end of the day. But finally, in terms of corporate action, the company reported or has declared a 25 naira interim dividend to shareholders, which is basically unchanged from what they declared in 9 months 20, which was also 25 naira. And in terms of dividend yield, that's about 2%. So we believe that since the pandemic, a lot of companies have been very wary in holding cash. So they have either opted to reduce their dividend payouts or, like we've seen with Nestle, maintain their dividend payouts. So I think that's it from me for Nestle. We'll be sending out our report as soon as possible. Thank you.
Thank you very much, Chima. Next up is Simbiat from the Global Equities Desk, and she'll be taking us through some markets from across West Africa. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. So I'll be doing a quick review of yesterday's performance in the Ghana and Nigerian equity markets, and I'll be starting with Ghana, where a total of 12 equities participated in trading, with the session ending with just one gain, 9 Republic Bank Ghana Limited, leading to a 9 basis point gain in the composite index. Year-to-date return for the market stands at 46.88%, while Ghana Oil Company recorded the highest volume of traded shares, followed by MTN Ghana, with total market volume declining by 27%. Going into today, we expect markets to recover from the low levels recorded yesterday as investors start to take position ahead of the Q3 earnings season. Finally, in Nigeria, the market started the week on a positive note as the ASI gained 12 basis points. We saw gains recorded in the consumer goods, insurance, and oil and gas space, which helped push the index further south, while we saw investors taking profit in the banking sector amid mixed Q3 earnings reports. Speaking to activity level, volume and value traded improved by 32% and 29% respectively, with FBN accounting for over half of market turnover, as we've continued to see investors ride on the bullish sentiments. So overall, the market has been trading in line with recently released Q3 earnings reports, and which has been positive for the consumer goods space due to the impressive numbers we saw in PZ and Unilever. And after the market closed yesterday, GSK and Nestle released theirs as well, with both top line and bottom line growing. So this could be attributed to the defensiveness of the consumer goods sector. And now that we're seeing a bit of recovery in the economy, a bit of rebound in the economy, and we are seeing this extra boost in their figures. So for today, we expect this pattern to continue while investors also cherry pick attractive counters across board. And that'll be all from the equities desk. Thank you.
Thank you very much, Cynthia. We'll now move over to Sheikh, and he'll be taking us through the BRVM. Good morning, Sheikh.
Good morning. So the BRVM market is still in a bullish trend in the wake of the half-yearly publication. So the market has been reaching its even higher objective than planned, maintaining its status above the 180-point bar, standing currently at 189.93 points for the BRVM composite. So in the past week, there was a certain domination by the seller with 16 stocks that remain green and 22 stocks down. The market's bullish trend is maintained thanks to the few large capitalization that persist and have allowed the market to stay on the rise. In this case, it was mainly with Aura Group. The agricultural sector made their contribution in the good performance of this week, with a market gain of 4.86%, the most important at the sectoral level. In terms of best performers, Nestle Ivory Coast stock jumped by 23.88%. The title had yet started timidly, and in the continuity of the gain that occurred after it approached the peak of 4,000 CFA, it is clear that the publication of half-year result displaying a 25.6% increase in net profit gave a boost, allowing it to cross its highest price in the last 1 year. This performance was followed with Vivo Energy, Ivory Coast, with an increase of 15.85%. Two factors mainly led the investor to rush for the stock. The first one is the announcement of the gradual return of air traffic, of which Vivo Energy is one of the key players in the supply of kerosene. And the second is the sharp increase in fuel consumption, two announcements that certainly reassured investors about the company's prospects. Other good performers of the market were Sucre Ivoire, Citab, and Palm Ivory Coast. For the lower performance, at the head of the flop this week, the title Filtisac recorded fifth consecutive week in the red, is one of the strongest downward trends in the market. The sharp drop in share value is mainly due to the publication of a loss of 136 francs in the first half of 2021. an announcement that was very badly digested by investors who preferred to leave their position massively to redirect their investments. In the second place of lower performances, Currencies still suffer from the lack of publication. Its 2020 result published a little late suggested a favorable result, but the lack of visibility persists on the evolution of the activity. Therefore, the title suffered a minus 11.11%. In terms of stock highlights, Palm Ivory Coast issued its third quarter 2021 activity report. The consolidated net profit went up by 410%. The super performance is mainly due to the improvement in the world price of crude palm oil in line with the economic recovery. Similarly to Palm Ivory Coast, Nestle third quarter 2021 business report was issued, showing a net profit of 26%, thanks to 11.5% growth in turnover driven by the increased local and export sales. Solibra Ivory Coast issued its first half 2021 activity report, and the consolidated net profit shoot up by 100.8%. Their strong performance is mainly marked by increased revenue from beer sales. In the bond market, the market capitalization declined by 0.45%. This regression in the market is mainly due to partial repayment of the capital of government bonds, just like the Treasury for Burkina Faso, Treasury Public for Ivory Coast, and regional bonds with CRRH, the leasing company. The weekly value stood at 3.40 billion, mainly driven by the Treasury Public Ivory Coast 2020-2027 bond for an amount of 3.06 billion during the session. In the money market, over the last week, the state of Burkina Faso and Senegal requested in the market a total amount of 80 billion CFA. The market which is still liquid, is very responsive and offered 253%. The issuers have only retained 81.2 billion, which represent an absorption rate of 40%. The most popular issue was the Senegal Treasury bill with a coverage rate of 248% and a total amount offered of 124 billion CFA. In this coming week, we are expecting treasury bills from the state of Ivory Coast for a total amount of 45 billion on the today, actually on October 26th, and on October 27th, the state of Mali is expected to issue treasury bonds for a maturity of 84 months, totaling 25 billion. Thank you, and that's it for me in terms of update from the BRVM.
Thank you very much, Sheikh, for those updates. Next up is Omorige, and he'll be reviewing fixed income and currencies. Good morning, Omorige.
Good morning, Victoria. Good morning, everybody. System liquidity declined slightly yesterday to open at about 243 billion negative, coming from the 222 billion negative that was recorded on Friday. Despite the slight decline in system liquidity, interbank rate declined by an average of 338 basis points in the absence of any significant funding need in the market yesterday. As a result, OBB and overnight rate closed at 15.5% and 16% respectively. For today, we expect interbank rate to trade at lower levels as OMO repayments of about 91 billion and also coupon inflows of about 122.18 billion come into the system. The parallel market traded at 573 naira to $1 yesterday, while the earning window opened at 414.05 naira to $1. The highest trade that was recorded on Monday was 415.20 naira to $1, while the closing rate was 415.07 naira to $1. Brent and WTI gained about 0.2% and 0.3% to open today at $85.79 and $83.55 per barrel respectively. The T-bills market traded on the lethargic note yesterday with slight bearish sentiment seen on some maturities along the long end of the curve. We observed interest on the short and long dated maturities, especially on the December 2021, September 2022, and the October 2022 maturities, while trades were majorly consummated on the CBN Special NTB. That's the November 29, 2021 maturity. Overall, average benchmark rate remained unchanged at 5.2%. The OMO segment also opened this week on a muted note, with interest largely seen on the 4th October 2022 maturity, while trades were majorly dead on the 31st May 2022 and the 26th July 2022 maturities, with average benchmark rate remaining unchanged at 6.28% levels. The bonds market opened the week on a muted note, with a weak sentiment seen across the benchmark curve as market players selected attractive offers across the curve, witnessed interest across board, especially on the 2028, 2035, and the 2050 securities, while trades were majorly consummated on the 2036, 2049, and the 2050 maturities. Overall, average benchmark rate remained unchanged at 12.01% levels. The Eurobond space, proceeds from the matured Access Bank 2021 Eurobond continue to spur buy-side interest in the Eurobond market, with the most actively traded corporate maturities yesterday being the Access Bank PEP, First Bank 2025, and the EcoBank 2031 Eurobond, while the most actively traded sovereigns were the Nigeria 2025, 2032, 2038, 2047, 2049, and the 2051 maturities. For today, we expect improved activity in the bonds market as market participants seek to reinvest inflows from coupon payments of about 122.18 billion that's coming into the system today, while we expect the T-bills market to trade on a muted note as players stay on the sidelines ahead of the NTB auction that is slated for tomorrow. However, we believe that the OMO repayment of about 91 billion might spur some buy-side interest in the OMO segment. That will be all for fixed income. Thank you.
Thank you very much, Omorige. We'll now round off with Justina from Frontier Africa Reports, and she'll be giving us some headlines from across Africa. Good morning, Justina.
Good morning. Good morning, everyone. Yeah, so we're starting here from the Southern African region where in Zimbabwe, the government says it will not adopt the US dollar as the country's sole currency, but will seek ways to preserve the value of the local units. And that's coming from the finance minister, Ntuli Nkube, who says such a move could result in foreign currency deficits and deflation. And right now, he has the full backing of industry experts who says that a move towards dual currency is the best option for the country. Today, South Africa will launch Toyota Cross hybrid vehicle. The vehicle, according to Toyota, will be exported to 40 countries on the African continent. Kenya's diaspora remittances declined marginally by 1% to $309.8 million in September from $312.9 million recorded in August. But actually it rose year on year. It rose between September this year and September last year. Bank of Uganda says its assets grew 17% to 23.5 trillion shillings for the year ended June 2021, with foreign assets accounting for 75% of the total assets, while domestic assets accounted for the remaining 25%. In North Africa, French telecom group Orange has declared its intention to increase its investments in Egypt by $300 million in 2022. Meanwhile, recent data shows that the investor confidence in the Casablanca Stock Exchange, investor confidence index in the Casablanca Stock Exchange rose by 6.5 points to 67.4 points in October. Amid the ongoing military coup in Sudan, the European Union is calling for the immediate release of the Sudanese Prime Minister and other cabinet members who were detained. We hope we hope that good news comes from that region soon. Meanwhile, the ECOWAS Bank for Investment and Development approved over $68 million in funding for projects in Ghana, Togo, Cote d'Ivoire, and Senegal. And that'll be all from here. Thank you for listening.
Thank you very much, Justina. We have now come to the Q&A segment. If you have any questions for our speakers, you can send them in using the chat function available on Zoom. And if you're joining us from Facebook, you can make use of the comment section. However, if you'd prefer to speak, you can utilize the raise hand function and you'll be given an opportunity to speak. Okay, looks like we do not have any questions for today. However, if during the course of the day you have any questions, you can send them to us at researchgroup@vetiva.com and we'll get back to you as soon as possible. We have now come to the end of today's session. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we thank you for joining us and we hope to see you in tomorrow's session. Have a great day ahead and good morning.